Hello everyone and welcome to Momentum channel. My name is Mo and in this video we're going to talk about a company called Green Renewables. This is a company that provides biogas upgrading solutions worldwide and allows the creation of renewable natural gas. The company's systems remove impurities and separate carbon dioxide from biomethane in the raw biogas created from decomposition of organic waste at landfills, wastewater, treatment plants, and farms and food waste facilities for injection into the natural gas grid for direct use, such as vehicle fuel. We're going to provide a quick overview of the company, what it does and what it provides, and what are some of its unique competitive advantage and how it can grow over the next couple of years. More importantly, though, we're also going to take a closer look at the company's stock, its fundamentals in terms of the financial metrics, and lastly, decide whether we think this is a good company to invest in or not based on our research. So hope you watch this video until the end and you get something of value from it. Let's get into it. The company's products and services focuses on two main domains. One is on the utility and pipeline, and the other one in transportation, allowing these businesses to decarbonize natural gas to use in their products and services. Looking at renewable natural gas ecosystem, you'd notice that essentially it relies on the manure from the animals, the crop waste, food waste, and wastewater sludge or solid waste. It through that process and through that ecosystem, it either goes through landfill or through a digester. And aside from, for instance, making fertilizers from those, waste, the gas that is generated through that process, or the biogas that is created through that process, needs to go through some process, as we call it, as upgrading. And this is where a company such as Green Renewables shines, because they provide those upgrading solutions that allow processing the biogas and separating the carbon dioxide and from actually the methane gas, which can be used for as a renewable natural gas for vehicle fuels, for pipeline injection, and so on. So really, through this process, you get to generate gas from renewable sources, and of course, it is net of any carbon dioxide. What's so unique about this market is that there is a continuous push in the world towards decarbonization. There are many municipalities, countries, and companies in the world that are rolling out plans for net zero greenhouse gas emissions by 2050, and also a strong push towards renewable natural gas. Numerous gas utilities and governments throughout the world have been targeting 10 to 20% renewable natural gas productions by 2030. And you see a couple of those examples here on the screen from different countries. This presents a significant global opportunity for companies such as Green Renewables. You'd see between 2020 to 2040, according to IEA, there seems to be a cumulative annual growth rate of 21 to 24% in terms of the global renewable natural gas production. And according to BP Energy Outlook, this number sitting at around 15% cumulative annual growth rate between 2020 to 2050. This would suggest that the total accumulated value of biogas upgrading equipment needed would be approximately at over $90 billion, and presenting massive opportunities for companies such as Green Renewables to take advantage of this trend. Here we can see some of the key industry developments that has happened in recent years around the emphasis on renewable natural gas. For instance, FortisBC, which is one of the key utilities companies here in Canada, emphasizes that their target is having 15% of their gas supply to be renewable by 2030. Or for UPS, they are going to make UPS the largest consumer of renewable natural gas in the transportation industry, according to their news release back in October 2019. Or even for Microsoft, they are envisioning that by the year 2050, Microsoft will remove from the environment all the carbon that the company has emitted since it was founded in 1975. And renewable natural gas is definitely one way to go about it, and as a result, presents a good opportunity for companies in this field. There are also a couple of other super major movements on decarbonizing and renewable natural gas in 2020. For instance, for the energy company Total, in May, of 2020, they announced new climate ambitions to reach net zero carbon by 2050. And in September, they announced a new global business unit dedicated to biogas and renewable and natural gas production. Similarly, for BP, in September, they provided a deep dive for investment community on new energy transition strategy, including their renewable natural gas approach. And for Chevron, they have a joint venture announcement with Brightmark LLC to own projects across the United States to produce and market dairy renewable natural gas. Now, that said, let's take a closer look at the technology that the company Greenlane Renewables offers and how it is unique and different from its competitors. Essentially, there are three main technologies in the world to treat and upgrade biogas and turn it into a renewable natural gas to be used. And what is so unique about Greenlane Renewables is that they actually offer all these three solutions as part of their products. You could see here on the screen, water wash is one of them, which is best for larger projects demanding high biomethane recovery and robust, reliable operation. They also offer pressure swing adsorption, or PSA, which is best for complex feedstocks like those generated in landfills. And lastly, they have the membrane separation, which is best for smaller projects and reduced upfront expenditure for those taking advantage of this technology. And Greenlane Renewables is one of the leaders in biogas upgrading. They have a lot of projects throughout the world. In fact, they are active in 18 countries. They have already delivered 110 plus systems globally, their biogas upgrading systems globally. And many of these projects are the very first project of its kind in their respective countries. So that gives the company the first mover advantage when it comes to delivering and installing biogas upgrading systems in those countries. The company has supplied the largest renewable natural gas production facilities in North America and Europe, essentially in the world. You could see here the descriptions for two sites, one in Güstrow, Germany, and the other one in Montreal, Canada. A few more examples of their projects. They have a project in California, USA, and one in Sweden, which Greenlane has supplied systems to the sites as the first commercial scale project to inject renewable natural gas directly into the 𝗖𝐋𝐈𝐖 network as one of their clients. Continuing to look at their competitive landscape and comparing them versus their competitors, some of the key competitors in terms of the installed capacity of biogas flow rate, you'd see Greenlane is kind of leading the pack. Greenlane has installed close to 120,000 normal metric cubic per hour of biogas flow rate, larger than its competitors. The company does have other growth potential as well, aside from delivering those products to the clients, also getting into building some of those strategic partnerships, the maintenance, and larger margins in terms of the profit. For instance, if you look at the company's revenue growth over the past quarters, you notice that their Q1 2020, they were showing $2.9 million in revenue, whereas in Q2, they grew it to 4.2 million, and in Q3, they grew it to 6.5 million. So they're definitely growing their revenue from those contracts. One other thing to note here is their sales pipeline growth. Essentially, their sales pipeline is defined as the qualified prospective projects that could convert into orders within approximately 24 months. There's no guarantee, but they are in contact with various clients, and there are the leads and prospects for them to convert it. So you'd see that their pipelines of those sales has grown drastically as of September 30th, 2020. So they have a lot more leads to be able to convert them into sales. And they also have some sales backlog growth. These are the balance for unrecognized revenue from contracted upgraded projects. So these are the projects that they have already kind of signed, but they have not yet delivered the project, or according to timeline of the project, they haven't got to that stage yet. This is definitely has grown over time. So once these are kind of converted and realized, you would anticipate that the revenue of the company will continue to grow and get larger over time. As of December 1st, 2020, the company has a total outstanding share of $106.7 million. But if all shares were fully diluted, that would be around 142.2 million shares. One thing you notice that there are also a large number of options outstanding and warrants outstanding. These are the warrants, for instance, they give the right to the key executives of the company to exercise those warrants and buy more shares of the company at really for more or less discounted prices. For example, these warrants, there are 23.6 million warrants available outstanding, only at 26 cents per share. But with an expiry date of June 2021 and 5.6 million at the price of 70 cents. So at any point, those warrants holder, before the expiry date of the warrant, of course, they can exercise that and kind of get those shares added to their kind of portfolio of shares. What the warrants does, of course, that would generate more finances for the company at the prices that we saw there. It can't be any more than that, but it also means for you and me, if we are shareholders of the company, our kind of ownership of the company and our decision-making rights is gonna kind of get impacted because now you own a smaller piece of the company, quote unquote. So keep that in mind. Dilution is not always something that many investors would like, especially at prices such as the one that you're seeing, like especially the warrants. Right now, the stock is at the price of $2.22. So those warrants are only around 26 cents or 70 cents. You know, if they are exercised, they are not going to create as much of a necessarily funds for the company because the price is much less than what the last trading price for these stocks are. So keep that in mind. The stock has been quite volatile though. If you look at the 52-week range for the stock, the cheapest it's been closer to 18 cents and the highest price has been $2.75. These are all in Canadian dollars. And the stock is traded on Toronto Stock Exchange Venture Exchange with the ticker symbol GRN or GRNV. In terms of the market cap, the company is currently sitting at $236.87 million in market cap. It has been quite volatile though. They have a beta of 2.43. Beta is a measure of volatility of the stock compared to general stock market volatility. The 1-year target for the company is set at $2.32. I did take a closer look at the company's quarterly earnings and their statements of operations and various statements here. I went through the past 3 quarters, Q1, Q2, and Q3. So I was quite interested in the revenue as well as their operating loss or operating profit. The revenue, as we talked about, definitely grew over time. But let's take a closer look at their operating loss. And this is after deducting the general and administrative costs. In Q1, their operating loss was $1 million. In Q2, it went down to $925,000 operating loss. And lastly, in Q3, the latest quarterly earnings that they released, the operating loss went down to $734,000. So I like to see that trend and how the operating loss is starting to narrow and get closer to the zero and hopefully getting to a point where you have operating profit. Their net income in the last quarter was positive, unlike the previous ones. But one thing I noticed is that as some of the warrants and shares of the company was disposed throughout that time and it resulted in generating some funds. So on paper, it does look like that the company has kind of have a net income. I wouldn't necessarily count that in as much because what I'm personally more interested in is seeing that the company from an operation perspective is showing me some operating profit and not so much because of the finances that it's kind of exercising and diluting its share to get to the point where they have a positive net profit. So keep that in mind. Lastly, we're going to take a closer look at the company's customers and what their top 5 customers are bringing in. So interesting enough, according to their latest quarterly earnings in Q3, the company has 5 major customers that are bringing in 10% or more of their total revenue during the period in the last quarter. These customers account for 11%, 11%, 12%, 19%, and 22% of their total revenue. And if you compare that to Q2, the previous quarter, back then they had 4 customers that they were bringing in over 10% of their total revenue. So they're in a way they're diversifying and adding more big clients. And those clients are bringing a lot of revenue. We also take a look at the company's balance sheet. So if you look at it, their current assets was sitting at close to $12 million, which is slightly lower than their current liabilities. Nonetheless, they have tried to improve it over time. You can see the gap between their current asset and current liabilities in December 31st, 2019 was larger, and they have actually improved it over time. As for their total assets versus the total liabilities, the total assets sitting at $31.7 million Canadian, and their total liabilities is sitting somewhere closer to $13.2 million in total. So definitely their total assets is doing a lot better than their total liabilities. So that's a positive note. Keep in mind that in calculation of their total assets, they are taking into account a large portion of goodwill and intangible assets. So those remain to be perhaps better looked at, and these are based on their unaudited financial reports. Personally, I think this stock has a lot of potential and it has room to grow. If we look at the future and analyst estimates for the company in terms of the upcoming year as well as next year, you'd notice that for the revenue, the estimates are continuing to grow. So for this year, for the year 2020, the fiscal year, the estimated revenue is at 22.8, but for the next year, it is estimated to be more than double to $45 million. So that is quite decent. If it actually pans out that way, shows also considerable growth year over year in terms of sales. So even for 2020, if that number comes true, that shows 149% growth, and for the next year, 97% growth year over year. Analyst average price target for the stock is at $2.32, and there's also close to a 1.5 or between strong buy to buy for this stock. Now, personally, for me, whether I would be going ahead and buying the shares of this company, I'm quite intrigued by Greenlane Renewables, but I would probably not be buying the stocks at this price. So what I would instead do, I would try to take advantage of a limit buy order and try to buy the shares at the prices that I'm more comfortable with. So for instance, if I go back to the stock's performance over the past and historical data here on Yahoo Finance, you notice that the stocks has been quite volatile, right? So for example, in the past week, let's take a look at the lowest price that the stock has gone. So the lowest price that the stock has gone was $2.12, okay? And the highest price that over the past week the stock has been $2.32, okay? So there is a little bit of that spread there, and you can see how the volume of the stock has changed. So for me, probably I will try to take advantage of that and put a buy order for lower prices, but not buying all my shares at once, and instead, buying in stages, perhaps buying first several shares of the company at lower prices, and then over time, if the stock continues to go up, maybe continuing to gradually add to my shares, or if it goes down, then I would not be kicking myself and continuing to buy at lower prices, taking advantage of the dollar cost averages. I think it's an interesting company. It's a little bit more of a speculative play. It's a small company, but I think they are showing a lot of promising future. We talked about how they are present in various markets. They have some of the largest global supply capacity to date and active in 18 countries. And they have some contracted backlog of over 43 million. That's very promising in a sense that that could result in exponential revenue growth for the company. They have strong intellectual property and significant market drivers that, with the transition towards renewable sources of energy and combating the climate change, that presents good opportunities for this company. Let me know what you think of Greenlane and its stock. Are you interested in investing in Greenlane Renewables and taking advantage of that? If you are, you can see here different ticker symbols where you can buy the stock. The stock is also available as on over the counter for those of you who are interested to get a hold of the company in US dollars with the ticker symbol GRNWF. Love to hear from you. Be sure to leave me a comment down below and let me know what you think. By the way, if you haven't subscribed to Momentum channel, please be sure to do so. Here on Momentum, we post weekly videos about stock market investing, finances, and financial freedom. With that, thank you so much, guys, for watching this video until the end, and I hope to see you next time.